The bloodbath on Google MMTs have come down to a major area, and it's a daily chart. The 200-day moving average just so happens to be at 588.76. The current resistance level, most of the daily charts have turned bearish when you got 10-day simple moving average crossing over. Not just this name, but a lot of them. So this is the base of where we found a lot of support. Yesterday we got right down to 601 and then we bounced. This morning in pre-market at 610 by 611 with a $5 gap sequence from the heavy, brutal down move that it took on its earnings. Again, in the calendar month of April in 2012, did the same thing in 2011. You know, the thing about it is that at some point we'll get the buying the dip. We'll be watching the daily sell signal on it, because once it goes into the daily sell signal, we could look down for some more down movement. Anything that goes to the resistance levels where they cracked, such as that 10-day simple moving average at 633, it could trade back up to 633 before rolling over. However, this particular trend line that I have here is going to be that major resistance level at around, let's just call it 623. So it is a monthly options expiration week, and we are in the heart of the earnings season. So as I have always said and always will, in our option pit here at SMF, we have our own pit, and our pit is saying that that these options are sold down. There will be an opportunity once the stock finds the low. There was 3 or 4 trades yesterday that once it hit, that those options could add 30, 50 contracts for a quick $1.50 to $2. So we're going to have to key focus in on there, so that when they pull this thing back to those support levels, just remember, just like when bull trends start, well, bear trends set up too. And they have their own characteristics, just as the bull does. So right now what we're looking at is a bearish reversal to the support level after the earnings. Okay. Now we will be looking here in the pre-market area. We had the 600 call that was marked down $15.10. This goes higher during this monthly expiration. The high was $23.75, down to $9.19, where it created the greatest buying opportunity in U.S. history for a monthly options expiration. Why do I say what I say? Because they were marked down another $15. So the call side that was way up there, here's the 605 call, hit 650. They closed at 22.40. They got marked down. The high was only 19.20. What a great buying opportunity for the 605. We'll be all over that today. And it is pre-market. There's the 610 that got down to 450 from 1730. Boy, they have taken the call side to the woodshed, which is ultimately what? Our profit. Why? Because everything gets oversold. This gap needs to come down, undercut that 602, drop down to the 602.75 or 603.50 area, get support, then bounce off of that bottom. We'll be using the MMT platform to gauge us. I will be giving some limit orders. It is a monthly expiration. You got IBM after the closing bell. We will only buy these for intraday, meaning that this is the second down day and the counter trend would come into play as far as featuring our Google trade, and that we are very close to going into a daily sell signal. Should that occur, we would short it down to this 200-day moving average here, 588. We'll take a look at the fact that every bull trend turns into a bearish reversal with a new bull setup. However, this little guy right here, if it goes into that sell signal, We're going to get to a point where this is going to get sold out in the short term. We're close to it. We're 23.78% DS right now. So, you know, it's all standard stuff that we don't use. We are market makers. It's between the bid and the ask and the buyer and the seller. That's what we use. So, once again, I am going to feature this thing. I'm going to feature the fact that it is going to get oversold. I'm also going to just take a look here on the weekly. And I want to take a look here on the weekly, and I'm going to take a look at where that percent DS is now. On a weekly level, it's at 56%. It is not overbought. It still has the weekly buy signal in play, along with the rest of the market. Bull side of the market, that is. But just let me caution people. I'm going to show you 1 day, 2 day, 3 day, 4 days down. Today is the 5th day counter rally. I will tell you that 10-week moving average, this blue line right here, and that 20-week moving average right there below that 620, that's going to be the upper end of that resistance. And I will tell you that the weekly MACD has been dropping because of that amount of selling. So we have 4 days of selling. The last time we had that 1 day, 2 day, 3 day, 4th day right here, right up here, right up here. Let us not be in denial. 1, 2, 3, 4 weeks straight down to the 50-week moving average and straight back up. We're going to be looking at the fact that this 600 weekly level is that major support level, and the major resistance level will remain at the 10 and 20-week moving averages. The 10-week moving average shall be 620.79. The 20-week moving average, though, is 619. And there is the daily chart behind it. We already looked at it. There's your $5 counter gap. We'll be looking at how this thing will have struggles at 613 and so forth. But remember, the 5th day is the turn day, and it is an options monthly expiration, and I've clearly gone over it to where that these calls have got to have a counter trend, and that the call side of the market in the short term, along with the equity, has been hacked and sold down and in bear reversal, but tradable off the bottom. So this is what we're going to be focusing on again, and these are the call contracts. As far as Apple goes in pre-market, well, you can see what happened to these people. We were short that thing a long time ago. That 644, I said, beware, Mr. Investor. If you own it, you're going to the woodshed. The 575 call, which is going to be tradable, we'll be looking at what if these will hold $10.50 and they can, you know, pull these things down very quickly on the open. We'll take a look and see if that bull mentality is there as it was all the way up to the 644. Every time they pulled it back, they gapped it, they ran it, they did all of that. Ring, ring, sorry, things are changing on Apple. They report on the 624. I'm sorry, they're not going to make their earnings. Why? Competition is getting stiffer. No one says it's a bad company. No one says they haven't sold anything. What I'm saying is that valuations are going to be are going to be very challenging at the higher end of the bar of the trough earnings. So it's a good thing that it's dropped from 644 down to 580 and should continue to sell down. Or do those fund managers feel that they're going to get both? What took the NASDAQ 100 down was this high beta Google and, of course, Apple. So we're all over these dips, buying the rips. We'll be watching the call side very carefully to where that engagement with that $5 gap has got to work itself off, drop back down toward the close. We'll see what kind of premium they steal. But I will tell MMTs right now, you don't pull that freaking trigger, you're just going to let that thing go by anyway. When it pulls back to support and you just sit there staring at the screen doing nothing about it, Well, that's what you get. The counter trend will come back down. It's to be traded from here back to the 620 area into the major resistances, featuring Apple and Google in pre-market. This one's got a $3 gap. In pre-market was down as low as $5.77. And they brought it up $5. Could have traded it up for $5. This one here, well, it is oversold in the short term. So today's the day to get it on and get some get back with Google.